Capital or Revenue, the Accounting Detective Show. Welcome, accounting detectives. Today we are solving the greatest mystery in the accounting world. Is it capital or is it revenue? I'm your host, Detective Debit, and together we will crack 15 tricky cases that have left even seasoned accountants scratching their heads. Before we dive into our case files, let's refresh our criteria for classification. For capital expenditure, which creates or improves a fixed asset or provides benefits for multiple accounting periods and usually involves a substantial amount and appears on the balance sheet. Whereas revenue expenditure, it is for maintaining day-to-day operations. It benefits only the current accounting period. It appears on the income statement, that is profit and loss account, and it will be recurring in nature. Whereas capital receipts, they are not from normal business operations. They are often from sale of fixed assets or investments. And it could be from loans or share capital. Whereas revenue receipts, it is from the normal business operations which are regular in nature like sales or service income. Let's open our case files and solve these mysteries one by one. Case number 1. The mysterious temporary huts. The question is, a company, if it is constructing a factory building and builds temporary huts nearby for workers, are these huts a capital or revenue expenditure? Let's analyze the clues. The huts are temporary. That might you think it is revenue. But they are directly related to constructing factory building. The factory is definitely a capital asset. Therefore, the verdict is capital expenditure. Even though the huts themselves are temporary, they are part of the cost of creating a capital asset. Think of it like buying eggs to bake a cake. The eggs might disappear in the process, but they are part of creating the final product. Let's move on to the case file number 2, the stamp duty dilemma. A company pays stamp duty to purchase new land and building for office purposes. Is it capital or revenue? The clues could be the stamp duty is not a physical asset. It's directly related to acquiring land and building. Without it, you don't legally own the property. Isn't it? So the verdict is capital expenditure. Let's move on to the case file number 3, the legal expense mystery. A company incurs legal expenses while filing a suit against customer, Hemant, who owes the money. Is it a capital or revenue? The clues are the legal expenses relating to recovering a debt, and there is no new asset is being created. It's actually related to daily business operations, and the benefit is uncertain and only for the current period. Therefore, the verdict is revenue expenditure. This is like paying a detective to find your lost wallet. You are spending money to recover money, but there is no guarantee of success and no new asset is created, isn't it? So, therefore, it is a revenue expenditure. Let's move on to the case file number 4, the machine accessory puzzle. A company spends money replacing an accessory of a machine. Is it a capital or revenue? The clues could be it's a replacement. Please note, it is not an improvement. And the machine's capacity or life has not been extended. And it's part of regular maintenance. Yes, the verdict is revenue expenditure. This is like replacing the headphones for your phone. You are not upgrading the phone itself. You are just maintaining its functionality, isn't it? So let's move to the case file number 5, the celebrity advertisement enigma. A company pays huge advertisement expenses to Mr. Virendra Kohli. Is it a capital or revenue? The clues could be the advertisements may bring benefits beyond current year, but those future benefits can't be measured reliably, isn't it? It's related to promoting current business. So the verdict is the revenue expenditure. This is like throwing a party to impress people. It might get you friends for years, or they might forget you next week. The future benefit is too uncertain to capitalize, isn't it? So let's move to the case file number 6, the machine customization case. A company buys a machine for 50 lakh rupees and spend 2 lakh 50,000 customizing it. We are focusing here on the customization part. Is it a cost, whether capital or revenue? The clues are the customization enhances the machine's utility and it's specifically suited to company's requirements now, and the benefit will last as long as the machine does. Hence, the verdict is capital expenditure. This is like adding custom features to your new car. They become part of the car's value and enhance its usefulness to you specifically, isn't it? So the next case file number 7, the building renovation riddle. A company spends 15 lakh rupees renovating an old building with new wiring, plumbing and roofing. Capital or revenue? The clues could be the renovation extends the building's useful life, isn't it? And it increases the building's value. These are major upgrades and not routine repairs. Hence, the verdict is capital expenditure. This is like giving your old laptop a new processor, more RAM, and a better screen. You have significantly enhanced its value and extended its useful life, isn't it? Hence, it's a capital expenditure. Let's move to the case file number 8, the land leveling conundrum. A company buys land for 25 lakh rupees and spends 5 lakh rupees leveling it for construction. Whether the leveling cost is capital or revenue? The clues could be the leveling prepares the land for its intended use, isn't it? And the benefit lasts as long as the land is owned. It is very necessary to make the land useful. Hence, the verdict is capital expenditure. This is like formatting a new hard drive before you can use it. It's a necessary step to make the asset useful for its intended purpose. Let's move to the case file number 9, the investment sale investigation. A company receives 1 crore rupees from selling a long-term investment, whether it is a capital or revenue receipt. The clues are the money came from selling an investment and not from operations. It was the long-term asset that converted into cash. This is not a recurring source of income, isn't it? So hence the verdict is it's a capital receipt. This is like selling your antique furniture. You are converting one form of capital into another. That is cash. We will be discussing the further case files into our next session. So remember, in the accounting world, proper classification is key to accurate financial statements. Until our next case files, this is Detective Debit signing off.